All right, this one's going to be a good one. Accrued revenue. Accrued revenue is probably one of the easier adjusting entries. And accrued revenue is an instance where we are going to recognize the revenue first before we get paid, right? So a customer is going to call, or not a customer, but a client will call me up. Great client. I work for this individual all the time. They pay all the time. They're always good for what they ask me to do. And so I don't really ask them for a retainer. That would almost be insulting to some clients. And so a really good client will call up and I will just start working for them, period. Um, and so uh, when I am working on a case for a client, I will just start working. And at the end of the period, I will look through my bills and records and I'll try to figure out how many hours did I work, what was my hourly rate. And let's just say I go through that calculation and I determine that I've worked a total of $30,000 for a client. The adjusting entry to record the $30,000 in revenue that I've now earned because we said we have to deliver the service and then the customer can choose to pay later. Look, I'm not going to bill the client until a few days, a few weeks from now, but I do want to make sure that I recognize that revenue in this accounting period. So the journal entry would be accounts receivable, 30,000, and revenue, 30,000. That's it. That's accrued revenue. Man, I'm going to keep it simple under 2 minutes.